Yeah, so alhamdulillah, I think the story goes back, and I tell this story very often, but there were three events that shaped my life that have led me to where I am today and why we're building this business. So the first event is really a personal experience with death. And subhanAllah, so a family friend. So her husband goes off for Umrah. He goes with a friend and they go, they drive. They go from Ras Al Khaimah, where we used to live, all the way. They drove to Mecca. And on the way back, so the driver falls asleep. They get into a car accident and they die. So I heard from one of the sisters that subhanAllah, I think the ambulance shows up and the husband Shahd, he like la ilaha illallah, and then he dies on the road. Subhanallah.
Assalamu alaikum wa rahmatullah, everyone. I hope you guys are doing well. So, welcome to a bonus episode with the one and only Sharene. So, this episode is going to be focusing on Takadao updates, TLD, as well as other interesting features part of our product update. So, Sharene, thanks for joining us.
Of course. Assalamu alaikum.
Alaikum assalam wa rahmatullah. You're obviously not a stranger to the podcast, but we're going to get you to reintroduce yourself anyways, just for the benefit of the doubt, for those who don't know who you are.
All right. So thank you, Shahd, for the introduction. So as you guys know, my name is Sharene, last name Lee. I am originally from Singapore, born and raised. Left after high school, moved to the United States. I lived there for about 10 years. Then moved to the Middle East, starting out in UAE and Dubai. And then I kind of went back and forth between the UAE and Saudi Arabia since 2005. So for the last 20 years, 20 years, been in the Middle East. And since the 2019, I've been here in Riyadh, Saudi Arabia.
So should you tell me, what is Takadao? I mean, for those who don't know, I know this is and probably something we've talked about a lot, but I just love to know what your company is, why you started. Give me the download.
Yeah, so alhamdulillah, I think the story goes back, and I tell this story very often, but there were three events that shaped my life that have led me to where I am today and why we're building this business. So the first event is really a personal experience with death. And subhanAllah, so a family friend whose children were about the same age as our children. I remember we had this whole group of families. We used to hang out together. We'll go picnic or, have dinner at somebody's house together. And so this was one of the families within this group. And this couple had 3 kids, and their kids were, I think the oldest one was 12 at the time, and the youngest was like 9 months old, something like that. And mashallah, the lady was our Quran teacher. So for the entire group of all the sisters, this lady was our Quran teacher. And so her husband goes off for Umrah. He goes with a friend. And they go, they drive. They go from Ras Al Khaimah, where we used to live, all the way. They drove to Mecca. And on the way back, so the driver falls asleep. They get into a car accident and they die. So I heard from one of the sisters that subhanAllah, I think the ambulance shows up, and the husband Shahd, he like la ilaha illallah, and then he dies on the road. Subhanallah. So then the next day we learn about this. So I think in the middle of the night we find out, and next morning we go to her house, the widow's house. And subhanallah, it's such a shock, right? So unexpected. At the time, I think I was maybe 28 or something. I was like, you, Shahad, who's your age? No, you're not 28. I don't know how old you are, but you are in your 20s. And it's something that it was so unexpected. You don't really know how to react. So I've forgotten most of that year, and maybe the year before and the year after that. This incident stayed with me. And I went to a house, and we went in, and I remember when we got in, I was like, subhanAllah, where am I going to sit? Because it was packed full of people. And like the entire house was full of people. And it was just like sisters from everywhere in the community who had come to really support her. It was not, some people say, oh, they came to pay their respects. No. It wasn't that at all. It was they came to support her. And they had, they came from everywhere, but she was also well known. because her husband, subhanAllah, he worked in a Dar al-Bir, which was like some kind of jam'iyah for, helping the community. And she was a Quran teacher, so she was really well known. So lots of people came and they brought food, they brought gifts, they brought toys, they just came to support her and to try to help. And so this was a very impactful incident for me, not only because there was a death that was so unexpected, and then you think about it, because it could have happened to any of us, right? So at the time, the husbands were going frequently to Umrah, and they would drive, and this is one of those things that just happens, There was not even it was not even an accident. Somebody just fell asleep, literally. So, and the other thing that was impactful for me was I was like, subhanAllah, all these people showed up to help. And they showed up because they knew her, because she was well known in the community. But I'm thinking to myself, if it were me, would I have had this, turnout? I don't know that many people, So I was like, you know what? It's so important to have this community around you, and to somehow, and really support comes from the community. I didn't see anybody from any organization that was there to help. It was just friends and family and the community around. So that to me was very impactful. I was like, hey, people need people, and people need a community, and the community is this thing that steps in and makes the difference when you're down. So that was event number one. Event number two was the 2008 financial crisis. Now, 2008 financial crisis was a real wake-up call for me. So I was like roughly 28 at the time. Alhamdulillah, had a little bit of money, so started to pay attention to what was going on around me financially. It was, subhanAllah, it was so surprised. I had always, so my major in school was economics, okay? So I understand the financial system, quote unquote, or at least I thought I understood it. Yeah. And I always thought that money was just the way money is supposed to be. It's just, that's how it works, There is interest, there is banking, there is, whatever fractional reserve banking. That's just demand, supply, all these economic theories. They made it sound, when they teach you this stuff, they make it sound like this is inherent. This is just how it is, okay? And in 2008, it was clear to me that's not how money works. And by the way, I forget that 2008 doesn't mean the same thing for you guys who were born after 2008 than it does for me. 2008, there was this ginormous financial crisis that was caused by what I call subprime loans. So essentially, people who shouldn't have been able to get a loan otherwise were getting loans to buy homes, right? And it was, and the reason why they were able to get loans was because the banks got so greedy. They were like, as soon as we issue this loan, even though this person is most likely going to default, does not have the income to pay it back, and we know it. But as soon as we issue this loan, we can package it into a security and then sell it to the retail investor as a security, which is like selling stock, right? And so the banks were doing this. From a risk perspective, if anyone cared to look into it, they would be like, this is way too risky. There's almost 100% default rate possibility. But the greed was so great and they were making so much money, so they kept pushing this. So it created this huge bubble, right? And the prices of the homes kept going up. There would be people with like no income or like just or cash rich who would be allowed to take loans on multiple houses. So one of my favorite movies is The Big Short. So go and watch this movie. You'll understand how this entire thing works. Anyway, fast forward 2008 and I'm like, dude, this system that we have is not inherent. It was a system that was designed by some fools who thought it was a good idea. They made decisions to make sure that this is the way the system is, and it usually benefited them in some way. And that's what we have today. And it's a mess. And it's stupid. And it's a terrible system, which has all kinds of injustices. Because guess what happens at the end of the financial crisis is nobody on Wall Street, who were the architects of this crisis, got into trouble. But all the regular people were homeless, their credits destroyed. They were unable to recover for many, many, many years to decades. Some people probably haven't recovered from that since. And it disproportionately hurts the average Joe. So 2008 was a wake-up call. There has to be a better way. Money shouldn't be like this. There needs to be a better way for us to run our finances, and it shouldn't be left in the hands of individuals who are only caring about lining their own pockets and making themselves rich. That was 2008. And the final event, I think, which was very formative, was my last startup, which was a technology startup. It was a peer-to-peer marketplace. We sold it, we exited it to the IKEA group here in Saudi Arabia. The big thing there was when I, being in this technology business and this technology space, it gave me the realization that this world is now driven by technology. And that if you want to make an impact in this world, it can only be through technology. And it's so obvious to you guys, the Gen Zs who are born with technology. But for my generation, it's not. Like, we came up, it was telephones, fax machines, that was the technology. And nobody cared about those things because they weren't that cool. They were like really business tools and things like that. We still, the way you make relationships was still to meet up with people. And, anyway, so it was not so obvious to my generation. But to me now, it's so clear that the only way you can make a change in this world is through technology. So that's a very long way of saying what we do today is a combination of those three events, or a culmination of those three events, where I want to build, and we want to build something that helps people to help people, that creates a community that actually helps one another, that is not based on the existing financial system, where this system needs to be community owned and community governed so that there's oversight and no one person has control of it. And then finally, it has to be facilitated with technology. The only way you can do this is through technology. And that's what we are doing at Takadao. So Takadao builds the technology that enables people to mutually insure and protect one another. That's it. This thing, these protection funds, they're owned by the community. They're governed by the community, and they're there just to protect the community. And of course, we use the technology to make this possible. And we use the technology to be our guards and our guardrails as well, so that we cannot, overrule the technology in a way that is detrimental to the group as a whole.
Got it. Yeah, like if you guys that fast, honestly, it's so inspirational. Whenever story, I feel like I'm hearing it for the first time.
That's only because you haven't heard it that many times. Murad is like, don't tell it to me again. You're killing me.
Talking about community and helping each other. That, you said that we're mutually insured. But what does that look like in real life? I mean, it's very fluffy stuff. What does that actually translate to when you're actually providing a product to the public?
Thank you for asking that, actually. So what we do is a corollary to insurance. All right. And I look at the way insurance is run today and I'm scratching my head. I'm like, I don't understand this for the longest time. And then I started to understand what happened. If you track back to the history of insurance, there are many, many origin stories to insurance. And the reason why there are many origin stories is because it popped up in one way or the other all over the world throughout history. So one of the origin stories of insurance is, the Arab merchants, right? So they used to transport their goods in caravans across the desert from one city to the other city. Now, they'll do this in a group because, if you transport a single caravan, it's much riskier for you, right? You die or something happens and you die and your goods are lost and whatever. So they did this in groups and they would go in large groups across the desert. Now, inevitably, even with the best preparation, something will happen. There'll be robbers. Maybe a camel will die or get sick, and there will be goods that either get lost or get left behind. So then the Arab merchants, in that situation, you can imagine, you're like, I don't want my goods to be left behind, right? And then the other guy, he doesn't want his goods to be left behind. So they start to fight. You can imagine this is exactly what happened. So they came to an agreement. They said, okay, instead of doing this, why don't we just mutually come to an agreement and we mutually protect one another? If somebody's goods are left behind, the others will compensate him for it. And so this was an example of insurance. And you find the same story in the UK, in London, which is Lloyd's of London, and shipping insurance. So the ship captains had the same issue where they said, there'll be a storm and then we'll have to throw somebody's goods overboard so that the ship doesn't sink. And then if we do that, we'll have to compensate the person. So these stories come up everywhere. Now, then, it develops into other risks. So there was this great fire of London, etc., that prompted the first fire insurance, etc. Now, these were all mutual aid societies, right? And some of the earliest insurance were also, craftsmen or some guilds where they had a shared risk. And so they're like, okay, we're all, let's say, workers, All right. Or I don't know what you call those. They worked with iron, whatever, high risk industry. So we're going to mutually insure one another. So these were all cooperative mutual aid societies. There was nothing profitable about what they were doing. They were just trying to help each other. Now, fast forward a little bit. And the thing that tipped the insurance industry into a for-profit industry was actually math. They invented actuarial sciences. Okay. Now, with all this very sophisticated math, and I say there's some technology that's in the background there, they were able to calculate things faster with a calculator, etc. Some geniuses figured out, hey, we can now predict the likelihood of an event happening. And so if we can predict it and we have some knowledge that other people don't have, right? Because we know how to count and we know how to do the actuarial math, then we can make money off of this. And then that's when they decided, okay, we can now bet against or for the likelihood of an event happening, put money against it and make money on it. And that's how for-profit insurance was born. So all of a sudden, the insurance groups or the companies or the people driving the insurance company would say, okay, let me go raise a pool of capital of people who are not actually subject to this risk that I am protecting against and not a party to the event. Okay. And then this pool of capital is going to bet against the people who are actually subject to the risk of this happening. So this is what we have in insurance today, which is you have external shareholders. They put together a bunch of money. And then you have the insured. And the insured, they pay the external shareholders. And in case something happens to the insured, let's say he dies, and this is life insurance, then the external shareholders are on the hook now to pay him back. But in case nothing happens to him, that money belongs to the external shareholders. It's a bet. That's exactly what it is. Yeah, it's really crazy when you think about it like this, because nobody will ever tell you this is what it is. So what ends up happening in the insurance industry is that you have this situation where the insurance company is going to want to minimize the claims in order to maximize their return and maximize their profits. That's just the way the math works. They cannot, pay you claims and not lose money. It just doesn't work that way. The claims that are paid out is for them a loss. Okay. What happens then? That means there is a very bad user experience when it comes to when you actually need them, they're not there. Okay. And we have tons of examples of this. For example, recently, Southern California, Los Angeles. It's very interesting because I come home so my parents have a house in Pasadena and they were living there. And I was staying there with them for 3 weeks in December. Long story. It was in Pasadena. And I come home to Riyadh from Pasadena. And a week later, Eaton, which is like maybe a couple of miles north of Pasadena, goes up in flames. All right. Anyway, so it really hit very close to home for me. So I'm watching this because my brother is still there. I'm like, okay, I'm paying attention to what's happening. And I see this news report where this woman is outside of her house. She lives in Pacific Palisades, which is quite far away, but nonetheless in flames. And she was with a hose and she was like trying to hose down the front porch. And the fires raging left and right around her. And she was like trying to hose, trying to protect the home. And she looks like she's in her 60s or so. And the reporter is like, did you know you're not supposed to be here? You are under evacuation orders. Why are you here? She's like, arrest me. I don't care, but I need to do this. This is my parents' home. They've lived here for 60 years. I grew up in this. I was born and raised in this home. And last year, after 60 years of paying this insurance company, they dropped coverage. They canceled our insurance policy. So they have no insurance. So if the house goes down, if the house burns, if the house gets damaged, anything, they're homeless. That's it. That's the end game. And the woman was really upset. She was like, for 60 years, these guys were making monies on our backs. And then recently, they decided the risk is too high. We're dropping you. End of story. Finish. Goodbye. And this is what happens when you have a for-profit pool of capital betting against people. And this is what the insurance industry is today. So coming back to your question, which I know, Shahd, you're regretting asking me these questions because I'm going off on a rant. Coming back to your question, what does it look like? How does it actually actualize what we're trying to do? So it's really simple. We, again, get back together to the origin of insurance, which is mutual, which is protecting one another. We collect money from one another. We all, as insured and as contributors to the fund, we all collectively own the fund. Now, a part of that money or a large part of the money gets invested so that the fund has returns and so that it can be sustainable. And if something happens to one of us, part of that money is going to be paid to the beneficiaries in order to ameliorate whatever problem it is. And if nothing happens, or if there's an underwriting surplus, quote unquote, so if there's money left over in the fund after the claims are paid, etc., then it gets redistributed among the members. That's literally just as simple as that.
Awesome. So what I'm hearing from you is we started off with people, and then we outsourced the trust. That turned out to be a very bad idea. They was for profit. They were manipulative. There were lots of loopholes. People didn't end up getting what they paid for. And we're bringing it back full circle and saying, hey, why don't we go back to the original concept where we're looking out for each other? It's not a for-profit motive. And it is about making sure that the person receiving it gets the money that they need and it's needed.
Exactly. Now, that is exactly the intent. Now, there are many actually groups that do this in an informal way, right? So you have tribes that have these WhatsApp groups that act as burial insurance so that somebody dies, they fundraise, or they already have a standing pool of money. It's very complicated. But what we do is we build this technology so that we can actually scale this up. Now, all these informal groups, what usually ends up happening is that the person who's in charge, like some family, the leader of the tribe or whatever, either becomes too busy and stops doing this, or is somehow, corrupt, or dies. I mean, ultimately, this is insurance, and it happens. And then this group just falls into disarray, right? And there's not an official way to collect money. There's not a place to manage the money. Everything is centralized and very, very messy. So we said, well, okay, how do we scale this up? And by the way, we need to scale this up because if you're with a small group, a few deaths or a few whatever incidents will essentially wipe out the fund. And this is very, very common. But if you're in a large group, insurance is about the law of big numbers. The more, the merrier. Then you diversify your risk. You have a larger pool of funds. Everybody's more secure. So we're like, okay, how do we scale this up? And it's obvious, right? You scale it up with technology. But then you got to be very careful about type of technology used because you could easily build centralized technology, which is one person or one entity controlling the whole show. That is an easy way to go. But you will inevitably end up with a situation you have with insurance companies today. Because for most insurance companies, they start out as mutuals, right? And then they ended up over the long run demutualizing. There's many reasons for this, and there's a very interesting article by the Boston Globe, and we'll share this link with whomever wants, about why companies ended up demutualizing and what are the flaws with mutual insurance companies. Now, just as a summary, the problem with mutual insurance companies is that they are still run by a centralized management that is for profit. The management team doesn't come to work fisabilillah. They don't come to work like as a voluntary gig. They come to make money. And because the insurance group wants to incentivize them to work and do the best they can, their compensation is tied up to how well the fund does. So as a result, they're going to start not paying claims. They're going to start, doing all kinds of funky things that the insurance company does. And so these companies and these mutual end up being more oppressive somehow than the non-mutuals. And then people are like, oh, we should demutualize because they're inefficient. They spend a lot of money on airplanes and things like that. Because, that's how the management gets compensated with private jets and expense accounts.
One thing actually I wanted to understand, because you were talking about how, why we started this and how people present people. But we're talking about insurance and you keep saying different types, right? Insurance can come in a whole, big pie, and you can have different flavors in your life. You've got your term, you've got your health, you've got your pets, you've got your so many. Which ones or what are you catering for right now? Given that you're providing the technology like you mentioned.
Thank you. This is why we need Shahd we need a conversation and not a speech, because I'd go off on a tangent and you'll never find me again. So Takadao today, we said, okay, what is the most pressing thing that we need to do today? And that's really life insurance, right? Life insurance, because it is something that affects all of us. There isn't a single person I talk to who isn't affected by the possibility of death and that themselves will not one day die. So we launched what is the Life DAO, and it is a life insurance alternative. And we say it's an alternative because it doesn't function like insurance at all. It is, again, a pure mutual that is now not run by a centralized entity, but rather by decentralized technology and it is governed by its members, and it is owned by its members. And that its intent is very intent is not to make money. It's very simply to protect one another. So it's a non-profit organization. And that is there to help you when something goes wrong, when somebody passes away.
I love it. I think it's very. I love that we started with that. I mean, not that I love people dying. I love us all, but I think it's so needed because death does not discriminate, and it's the one thing you just don't know when it's going to happen. So having something like this as part of your financial plan is extremely important. You want to make sure that your loved ones have something to take care of them for the medium to short term, making sure that they're able to cover burial costs, repatriation, and anything in between, right? If you want to help get your kids through a couple of years of schooling with that money, you're able to use it. But what I'm probably interested, and I'm sure a lot of people are thinking about as well, is you mentioned life insurance, and that turns heads for people who are Muslim. That life insurance alternative sounds too good to be true. How is this share compliant? I'd love to hear more about that.
Yes, thank you so much for asking this question. So, number one, I can probably walk you through the Sharia components of it, and I will actually, but usually that goes over the head, and it's really the stories that matter. So if we look back in the history, the very earliest example of life insurance actually was in the pre-Arabian times, and it's in a system called the Aqila, where the Arabian tribes essentially had collected money from their tribe members. It's a standing pool of funds which they would use to pay blood money. So if one of their tribe members would kill somebody, whether within the tribe or outside the tribe, accident or on purpose or whatever, they would take this money and they will pay the blood money on behalf of this individual. Now, there's a very practical reason for it, right? So if somebody was within their tribe, it's obviously because they need to help their tribe members. If somebody was outside of their tribe, it was to prevent tribal war, because you can imagine, now if the guy doesn't have the money to pay the blood money, the tribes are going to go to war. Now, this happened before the time of the Prophet and during the time of the Prophet and going forward during the time of the Khalifa and everything. And during the time of Umar ibn al-Khattab, radiallahu anhu, he actually instituted the Bayt al-Mal, which a lot of scholars consider the first kind of insurance, social insurance fund. Anywho, so all of these structures, so the idea of having a standing pool of funds that pays out when somebody dies is totally Islamic. It's pre and during Islam. The Prophet never objected to this. He also participated, I believe. And so there is nothing wrong with that. And then we have many hadith which has a lot of different, ways of saying you guys need to prepare for the unexpected. So that's the hadith, the famous hadith about you need to tie your camel, meaning tawakkal Allah, you trust in Allah to deliver whatever needs to be delivered, but you need to do your part. And then there's today we just talked about it, there's this hadith about the upper hand is better than the lower hand, something like this, where essentially you want to be the one giving and not the one who's asking to receive. And the only way you can be the one giving is if you plan ahead of time. So there are a lot of these hadith which tell us that, we cannot just let the world happen to us. We have to accept whatever the qadr Allah is, but at the same time, we have to prepare for it. Okay, so the idea of having insurance is not at all contrary. Now, coming back to why is insurance haram generally, it's not the concept of insurance itself, it's actually the way insurance is practiced today. Now, I already explained earlier that insurance is a big gamble. You're betting against the house. You're in a casino when you buy an insurance policy in today's insurance system, all right? The reason why, and now we go down to the Sharia points. There are 3 points which makes insurance haram. One is the idea of riba, which is basically the insurance companies, they invest in ribawi instruments, so interest-based instruments like bonds, mainly government treasuries, etc. In addition to that, if this is a commercial enterprise, which in commercial insurance it's a for-profit enterprise, you are essentially paying money to the company and receiving a much larger sum back. That's if you get a claim. So there is riba in that. That is considered to be a form of riba as well. The second thing is uncertainty, gharar, which is in a commercial contract, you cannot have very high levels of uncertainty. So let's take a trading contract, for example. You have to, if you are buying something, you need to know what you're buying precisely, what the quantities are, and how much you're paying for it. Okay? Now, this is for commercial contracts. So for example, if I go to you and I say, okay, Shahd, I know you have 3 houses. I'm going to pay you anywhere from $500,000 to $1 million for any one of your 3 houses. This will not be a valid contract because there's way too much uncertainty. You don't know what you're going to get. And you don't know what you're selling either. And the last thing is the idea of gambling, a maisir. Why is this a gamble? I already told you, insurance today is a gamble. It's a zero-sum game. One party has to lose for the other party to win. And it is, again, a for-profit enterprise. Now, how do we resolve all these issues now? By the way, we're not the first to come up with the idea of takaful, which is Islamic insurance. It exists all over the world as a documented Sharia rulings about it and how it's practiced. So how does takaful generally, which is the form of insurance that we are implementing, how does it function? First of all, if the money is used, I have no claim over it. Okay. Now, the thing though that is because I am part of this community, if something happens to me, that money is again used to help me. But it is not a commercial exchange. So that means, that part is permissible. By extension, the gharar or the uncertainty there is also gone because I know for certainty that the money that I'm giving is gone. Because it's a donation, I'm saying it's gone. The only condition is it must be used in a certain way. So I don't give you the money to go and build a well, for example, or open a school. I give you the money to be used to help other people in the fund, okay? But I expect that the money is gone. Now, the only condition where there's some money that comes back is if the money is not spent, then it rightfully needs to go back to the ones who contributed in the first place because the objective of giving the money was not met, all right? So that's why you have redistribution of funds. It is not for commercial enterprise. It is not for profit. And the last thing is the gambling aspect. Now, there is no gamble here because there are no parties betting against each other. We're all doing this to help one another. So that also very effectively goes away. And this is why takaful Islamic insurance is permissible under the Sharia rules.
Makes sense. I think so everything you said seems very clear to me how it works from a traditional insurance perspective, and then from a takaful model, which like we've extracted our methodology from. But then when you're saying that that our platform is non-profit, how do we operate? Because then if we're not making money off of that, how are we making money?
So we at Takadao, we're definitely a for-profit entity, but the fund itself is not a for-profit entity. Okay, so the operations of the fund do not try to optimize for profit. Now, what we do is we charge a protocol fee for the use of our technology. So for every $1 that we receive, we charge 22%. So we receive 22 cents. Now, once we receive that fee, that's it. We're out. We don't participate in profit. We don't participate in underwriting surplus, none of that stuff. Okay. And this keeps us neutral in the process. The only thing we are interested in is that the fund stays sustainable. Because if the fund is not sustainable and if it doesn't grow, then we basically are out of a job. So this is the only thing we're interested in. But how much money is not relevant to us in the sense that if the fund is very, very quote unquote profitable, they have a lot of underwriting surplus, or if the fund has only a little bit, that actually doesn't affect our bottom line.
Okay, very interesting. I just realized this entire time we're speaking about fund and we're speaking about the technology, and we actually haven't talked about our live product. So this is probably a good time to insert it. But it's gonna sound like kind of goes over people's heads when we speak about that we are a life insurance alternative, and the platform is called the Life DAO. The name, the Life DAO, I'm hoping gives people the signal. But I want you to walk us through what it would look like for Shahd. Allah forbid, may Allah protect us, that I pass away. I've signed up. What does that actually look like for the family when they come to receive the money that you're saying that they can get?
So your beneficiaries at the time of you joining the Life DAO will be informed that they are beneficiaries of yours at the Life DAO. So they will have some kind of receipt in their email inbox. And if something happens to you, la qadar Allah, your beneficiaries will come to us and immediately they will inform us something has happened. Now, this kicks off what is called the benefit payout process. Now, once this happens, we assign to them a concierge who will take them through the whole process, right? And this includes the option for them to connect with our partners who will provide them with burial services if this is available in their country, or if they want to have the body moved. For example, a lot of Muslim immigrants, they want to be buried back home. So repatriation services, and this is all done through our partner networks. Now, the important thing here is that we understand that the benefit payout process sometimes takes time, right? Because you need the paperwork, etc. So our partner networks are going to provide these services without upfront payments on the promise that because you're a member of the lifestyle, you're going to get a benefit payout. Therefore, they will get paid later. And this, I think, is really important for the family at the time, because you really don't want to be thinking about how I'm going to pay for it. Usually when somebody dies, it's very hard to get access to the bank accounts. So if somebody doesn't have money in their bank accounts, it's like even if you had the money in a bank account that belongs to the deceased, you can't get your hands on it for a little while. So you really don't want to think about this. So this is step number one. Now we get that all taken care of, sorted, and then we're asking you, okay, now give us the documents that will enable us to verify that this has happened, and then you get paid the remainder of your beneficiaries get paid the remainder of your death benefit. And I'm going to go into the claims process in a little bit. The good thing about using our partner network to do burials, etc., is that they will already be gathering these documents for you during the burial process. Because in most countries, to get buried, you can't just bring a random body and bury it. You actually need to identify the person and have a death certificate and all this police certificate and things like that. So if you actually connect with the partner network, they will have this all done for you, and your claim essentially gets verified by them. All right. Now, we call this the stage 1 claims process, or the benefit payout process, which is documents, right? Documentation. So the documents get verified either by the partners or by our internal, not our like Takadao, but by the lifestyles verifier pool. Now, who are the lifestyles verifier pool? These are actually other members of the lifestyle who have opted in. They raise their hands and they say, okay, I want to help out in keeping the lifestyle secure, and I'm going to help out with verifying claims. Okay, so stage 1 verification, they get a document, and usually it's a death certificate, police certificate, or a medical certificate from the hospital. And each of these documents will be given to 3 people to verify. And they all have to come to some kind of consensus whether the document is authentic or not. Now, if the documents have consensus that they are authentic, then this thing moves to stage 2. And stage 2 is what we call manual verification. And here, other people from the verifier pool are making phone calls to people in the community. So we call the government, we'll ask the registrar if this death certificate is authentic. We'll call the hospital that issued the medical certificate or the police station. And then we'll call family members, and we'll call employers, and we'll call members of the community. Just depends on the situation. And we'll, again, these all have to come to a consensus that, okay, the information provided was correct, and this passes stage 2, and then the claim is approved. Now, we aim to do this within 72 hours. So once all the documents are provided, within 72 hours, this process should be complete. Now, that's why we have a pool of verifiers. So we have many, many, many verifiers who can opt in. So if somebody's not responding, we kick him out immediately and we find somebody else to do it. Now, the important thing to know here is that the verifier pool, they're all anonymous. So they don't know who one another are, right? They are identified within the system itself, the verifier system, but to one another, they don't know who each other are. So we call this a double-blind process. And the final thing I want to say about this is that after all of this is done, the results are actually published on-chain. Now, of course, without the personal information of the deceased and the family. So they are basically wallet addresses, so that people can actually see, okay, what happened in this claim. And this is for, transparency and auditing purposes. So this is how the claim process will work. And then once everything's approved, the beneficiary then tells us, okay, where do they want this money sent? Now, because we are blockchain based, we can do crypto payouts, which is the preferred method because it's instant, it's fast. But we can also help the beneficiaries off-ramp. So we have off-ramp partners who can help them get this into fiat currency.
That brings me nicely to my next question, because now you're telling me, right? So when I pass away, the documents are uploaded, they're verified. Now my family gets this big chunk of money. In my case, the bracket was like between 100K to 120K. Now that's a lot of money. How exactly do you guys go around making that much? I mean, if there's multiple versions of me, but I hope not, but across the world, how can you ensure that my family's going to get $100,000 if I were to pass away?
That's an excellent question, by the way. And so, okay, the way insurance works, or the way this kind of mutual protection works, essentially is there's a lot of people who contribute to the fund. So there's a lot of money, but each one is contributing just a little bit of money. And there are very few people who actually get a claim from the fund, right? So if you look at a typical insurance fund or a typical group of people, generally speaking, usually fewer than 1% of people will die in a given period of time. This is just the math. This is just mortality tables. So you're going to have a large pool of money, and you'll be able to afford larger payouts than what the person paid in. This is just the way insurance works. Now, in our particular case, we have something even more powerful than that. We have what is our patented underwriting algorithm, which actually is constantly monitoring and self-adjusting the benefits to whatever the risk is in the fund. It's a very important thing, but let me give you a little bit of background. So when we built the system, we said, look, it needs to be a non-profit system, okay? Which means that we cannot take external for-profit capital, which is the way insurance does. If we have a pool of shareholders who are here to make money from the insurance system, we are messed up. We're back to the whole for-profit system. We're back to the injustices. So we said no external capital, number one, which means the fund has to be, the insurance pool has to be funded by its members only. Number two, we cannot take reinsurers, because reinsurance is exactly an external pool of capital looking for a place to make money. So no reinsurance either. So then how do we hedge against the risk? How do we make sure we manage the risk so that it doesn't cause the fund to be insolvent? All right. So we built this system where we say, okay, there are two things. First of all, we look at the individual risk. We take an individual, we say, okay, how old is Shahd? Does she shisha, not shisha? Where does she live? Is she, of a normal weight, or, something like this? And then we say, okay, this is her risk. And so for every $1 that she puts in, she will get a benefit multiplier of 250. So for every $1 example, for every $1 that she puts in, she will get out of it 250, or her family will get out $250 in case something happens to her. I don't actually know what your BM is, your benefit multiplier. I think it's way higher than that because, mashallah, you're young and healthy, etc. But this is just an example.
Well, I don't know. I should check on that BM.
Yeah. Yeah. Okay. So we look at the individual risk, and then we say, okay, but individually, yes, we also need to look at now the portfolio risk. So we need to look at everybody as a group. How risky is this group? Because you can have a group of 20-year-olds or 25-year-olds and it's a very low risk group. Or you can have a group of like 60-year-olds and it's a very high risk group. So at any given time, we need to assess the risk of the group. So when we look at the group and we say, okay, we expect this much of a loss ratio, meaning how much we're expecting to pay out in death benefits. And if the loss ratio now exceeds a certain amount, right? Because suddenly there's a very high influx of very high risk people or something like that. Or no, I'm sorry, that can never happen. Suddenly there are unexpected numbers of deaths among a low risk population, for example, because of some external event. Then we're going to adjust all the benefits downwards, okay? Which is why when you come to the website, you will see there's a range. So when you tell us how much you want to contribute, we never give you a fixed amount of the death benefit. We'll give you a range because we're accounting for the fact that there may be fluctuations in how the loss ratios work. So therefore, that's how we keep ourselves solvent. And this is and the fund, the technology is in real time adjusting this at any given time.
And in the back end, then also adding the underwriting algorithm and being able to have this bracket as opposed to it like being a fixed amount. Those are, I think, two parts of the equation. But then what about what's happening with the money in the back end? So now that it is sitting there looking pretty, what do we do with it while we're waiting? Well, Allah forbid.
So alhamdulillah, we have great, very strong precedents, and mashallah, this is the beauty of Islam and Islamic finance, is that we are encouraged to invest this money. Zakat in itself, zakat for those who are non-Muslims, is a system where the wealth of an individual is taxed 2.5% annually if it is not deployed, if it's not being used, if it's not in use, if it's just sitting there, then you have to pay 2.5% of your wealth in taxes. And for many people, zakat is there actually to punish people for hoarding wealth. Not punish necessarily, but it's to discourage people from hoarding wealth, and it's to encourage people to deploy and to invest and to use their wealth for something. So likewise with us, this money gets invested, all right? And it gets invested in Sharia compliant instruments. Now we have three pools of investment vehicles that we put this money in. We have the Now pool, which is a low risk, very short lockup period pool of funds. So within, if we invest, we expect to be able to realize a return and get the money out within 7 days. We have what is called the Soon pool, which is a longer term pool, which is between 3 and 6 months. And that amount of money has a little bit more risk involved, but then it also has a higher return. And you have to lock it up for a little bit longer. And then we have the later pool, which is between 12 months to 18 months, where you have to lock it up for that long, but it is a long-term, higher risk, high return investment. And so this is how we deploy the funds. Now, I have to say, for the Life DAO, Takadao is not investing your funds. Okay, let me be very clear. We are not actively managing your funds. We're not actively investing your funds. The Life DAO is going to employ protocols which will auto-invest. So almost like an ETF where you have a robo-advisory, or hire wealth managers or place their funds with wealth managers that will invest and actively manage those funds. But those wealth managers, guys, is not Takadao. Let me just be very clear, because this is not our, this is not our business, all right? Our business is just to facilitate this membership, this group. Now, these wealth managers are chosen by the DAO, right? So the people, the members of the DAO and the members of I shouldn't call it a DAO, but anyway, the members of the community get to actually select and vote on who they want to place their funds with. And they can replace people as well. And this is through a proposal process that people vote on.
So what I'm hearing is that if I were to, I joined already. I hope I would have joined. I the Life DAO today. And so I paid my yearly contribution. In this case, I opted obviously for the highest amount because I do want to get the max output for my family with Billah. So I'm paying $250 a year. And while I'm waiting and I'm going about my life, you guys are doing the hard work in the back, and you're making sure that we have the right partners in place to manage that money so that it helps to multiply the funds, so that when time comes, Allah la qaddar, you can deploy it to my family and they're able to use that to help, move on after my passing, if I were that were to happen. Super cool. And why do you think someone would opt for something like that? I mean, it sounds very cool. Oh, yeah, you can manage my money, but why would you choose to actually stay with within our fund? Why not go somewhere else?
Yeah. So, I mean, for me, first of all, Sharia compliance matters a lot to me. And I also think, generally speaking, it has a better return. So I don't have any solid data for this, but I believe a Sharia compliant fund generally outperforms the non-Sharia compliant funds. But anyway, whatever that is. So what we're doing is, everything what we're doing is, the intent is to be Sharia compliant. Inshallah, we never fall out of Sharia compliance. So that's number one. Number two is, if you're like me, I'm busy. I'm running a company. I have so many children, starting to lose count, and alhamdulillah, I have family. I have all kinds of things to do. So I don't have time to really go and track the market and to invest funds on my own, right? So I really would prefer somebody else to do it for me, right? Otherwise, it's just going to sit there, the money, because I don't know what to do with it and I don't have time. And then if I do it, I'll probably mess it up. So that's number two. So I'd rather somebody else do it for me. Now, if I go in the market today and I try to look for somebody who's Sharia compliant, and by the way, digital asset fund. So I want some crypto exposure, because that's like the thing that I believe in right now. That is the anti-financial system, right? Not to mention it's doing very well. So, that helps. I want crypto exposure. Yeah. So if I go and I try to find somebody to do this for me today, I need to at least put in 25,000 before the guy will even turn around and say, and look at me, right? Or the woman. So I cannot on my own go and find a wealth manager to do this for me. So I'm like, okay, let's do it with the Life DAO, who already has the minimums required.
No, that's that like this for me, I'm a big finance person. I probably can't stop talking about money. All I talk to my parents, my family about is like invest here and like put your money to work. To your point, you don't want to just sitting there in your bank account, collecting dust or however else you want to do it, but really being able to see the use cases and being able to then put it in. So like to your point, right? It's a really good asset class to be exposed to, especially what's happening now. And if you're someone who is an individual that's like, hey, this is cool, and I understand that I want to take the next steps, but where do I start? How do I do it? How about I give it to a company that has the same ethos, the same values as me, that I know will be managed the correct way, bi'idhnillah. And then you're able to like get those returns, in on par with funds. Awesome. Okay. Wow. So many things. So if I had to just summarize what we've just talked about right now, and I feel like I need to listen to the recording again just to absorb it all. But really, what you're saying, someone joins a lifestyle, they get this protection that's unified. So it's not only just here's some of money for your family, but it's to say you can tap into our network of partners that can help make things much easier for you after the death. So when it comes to burying the body, when it comes to taking the body back home, any other short-term costs involved, legal work, you get that covered. You're also telling me that while we're waiting, we also are able to put money into the fund so that we can, help make more money while we're waiting, and it's all managed in a Sharia compliant manner. So this whole entire package is like we're basically taking death and saying we're taking care of the pre and post death services and putting it for you on one platter so that you don't have to worry about it or your family for that.
Yeah, exactly. Again, Shahad, Asa, you must have been like summary queen. I can tell you were like a top student. All the entire lecture in 2 paragraphs. MashaAllah. My notes are just like, oh, all over the place.
That's what happens when you have to you listen to like hour-long lectures and you have friends who have not studied, and it's like I need to know what was said in an entire semester in 5 minutes, and that is how.
I bet you in university there was like 6 people sitting around you all the time. In front, around, behind, they're like, what is she writing right now?
Alhamdulillah, no. Honestly, it's just practice. Practice makes perfect. Jazakallah khair for your time and for sharing all that information. I think that this has been honestly, it's been such a good learning experience for me as well to understand how much work we're putting in, and really it goes from A to Z for us. We are want to make sure that like everyone that signs up for the lifestyle gets what they are promised, right? We want to make sure that there is this, cause hand holding from because this is especially death. It's such a sensitive, it's such a like any unfortunate thing that you have to lose someone temporarily. Bismillah, you then are reunited in Jannah. But this period of time, we want to make sure that there's ease, right? So we hope to be that company that people partner with for that ease, inshallah. So just maybe before we wrap, any final words you want to say about the lifestyle and why people should sign up today and not tomorrow, because tomorrow is never promised.
Yeah. SubhanAllah, I think maybe the last thing that I want to say that is not said is even if you don't do it for you, you kind of want to do this for the greater good and for other people as well. Because this is one of those systems that it requires the whole community to pitch in order for this to work. So it's not like, oh, just a select few. It needs to be inclusive, and it needs to be like, I may not benefit from this necessarily, but then somebody else will. And I think it's very important that we get together as a community, regardless of whether we have something in common or we don't, because we are, at the end of the day, when it comes to life, we all have something in common. We are humans and we are alive, and people really need to help people. I think today, when all of our interactions are mediated by, calls and technology and like Snapchat and things like that, we become more and more disintegrated as a society, and we really need to remember that at the core we are people, and that and that we just all have something. We're all the same at the end of the day. Doesn't matter what religion you're from. Doesn't matter what country, what nationality, what class. We're all the same. We all will die, and we just really need to bind together as people.
That's so. I love that you mentioned that. Like, wallahi, my heart is so warm because I think that's something that we all need right now with what's happening with the world. Everyone just needs to help each other. And if it's to Shireen's point, right? If you're not doing this for you, do it for the mother, for the brother, for the daughter that's going to then receive the payout, and you will be part of someone's story that will later say, these people helped me out, and may Allah give us a good ending, inshallah. But that's something that's so powerful that you helped someone, come out of the ashes, and support them for a short to medium point of time if they were to face an unexpected loss. Jazakallah khair. Thank you so much for your time, efforts, and love speaking with you. Inshallah, we'll do many more of these podcasts. I have so many other questions I could ask, but for the sake of the listeners' ears, we're gonna wrap it up here, inshallah. And with that, I just
Yes.
want to say thanks everyone for tuning in.